Hey, Mark, man. Chicago Wrigley Field, I hear you. Let's see, you can't get the music to stop, Gail. Does everybody else have music playing? Okay, good. Okay. All right, good deal, good deal. All right, well, good. Well, we appreciate you being here. What I'm going to do is take you through a very brief risk disclaimer, and then we'll turn things over to Darrell. But again, you guys know this, there's risk involved in trading. Anything you do that can make money, you can also lose money in the markets. So I think that's probably not a big shock to a lot of you guys. You've been around the block before. But again, risk involved, and yeah, there you go, Darrell. Risk involved in trading. Tell you a little bit about the Trading Pub. The mission of the Trading Pub is to provide a place for our patrons where they can hang out with some of the top traders in the industry. The pub is the place to receive quality education, all while interacting with traders and investors who are just like you. Through the Trading Pub, what we want to try to accomplish, we want you guys to learn about the market. We work with top traders in the industry. We've got Darrell Martin, Steve Ribble here today, and they're going to be doing an excellent job educating you. And then I'm going to come on and kind of wrap things up, just talk about a couple different markets. We want you guys to enjoy your time here. If you've been to a Trading Pub event before, we're very laid back. It's all about just kind of learning about the market in a laid back atmosphere. So we want you to enjoy your time here. And then we also try to put a focus on charitable giving through Trading Pub, and 10% of any revenues generated are given to charities focused within the inner city with a mission on inner city revitalization. If you want to stay up to date with us, our website, it's www.tradingpub.com. We had posted a link earlier. We record all of our sessions. We put all of them on the site, and that's all posted. If you want to save it in your browser, if you go to tradingpub.com and click on free education, I'll actually give you the direct link to the free education part. But if you want to kind of favorite this page, click on tradingpub.com and free education, and that will get you access to all of our recordings. We launched the Trading Pub in July 2011. Since then, we've hosted probably over 125 or 130 different traders, so probably close to 200 sessions at least over the past year and a half, and you can get access to all of those at that website. So again, definitely something you want to bookmark. If you're on Facebook, type in yes or no if you're on Facebook. Type in a yes. I'm just kind of curious to see. Type in yes or no. Let's just see kind of what the room looks like. Something I always say is I hope that you're on Facebook, but I hope that you don't own the stock. So again, yeah, not actively. Well, there you go. Hey, Arian Colin. I hear you. Well, you can like us there. It's facebook.com/tradingpub. And yeah, Facebook has come up this month, but hope so maybe you got it at the bottom. But we do a lot on our Facebook page. If you're on Facebook, you can like us there. We passed the 25,000 mark this week, so that was a exciting thing for us. But we'll post a lot of news and interesting things on our Facebook page. But if you're not on Facebook, again, you can still check us out, get all the recordings at the tradingpub.com/free education page. We've got a breaking news. Okay, we're at 26,000. There you go, Bill. So yeah, we are at Twitter. We're in the Twitter sphere. We don't do as much on Twitter as we do on Facebook, but you can follow us there on Twitter. I know Darrell's on Twitter. Steve does a lot on Twitter as well. Steve, if you can type your Twitter handle in, he puts some really good information out on Twitter. But again, rules of the road. If all we ask really, if you're going to be here, is be cool. Don't be the guy on the left. If you have, and we've had this before, where somebody's talking and we'll get somebody in here typing in kind of competitive stuff or saying join my website or send me an email. This isn't the forum for that. If you'd like to speak to our group, shoot us an email. Arian, yeah, Arian, we didn't mean to put your picture up there. So yeah, there you go. But don't be the guy on the left. If you're going to be here, you want to be that guy on the right. Be cool and enjoy your time. So we appreciate everybody taking the time to be here. What I'm going to do is turn things over to Darrell. He's our first speaker here. One thing, I'm going to put a link in here, and Darrell's going to be talking about Nadex. We set up a site with a lot of free Nadex education, and you can click on it here. I just posted it as an announcement. But basically, the way this works, if you put your email in, Darrell also has an archive of lots of good Nadex info. And if you put your info in there, you'll get an automated email with several good recordings plus access to Darrell's archive. So again, you can put your email in there. And also, Darrell and I are going to be doing a live trading session on Monday, Monday morning, and anybody that puts their information in this link, that tradingpub.com/Nadex link, anybody that puts their information in there, we'll send you an automated email as well later today to educate you on, or to give you an invite to that live session. So, Darrell, at this time, I'll turn things over to you.
All right, let me go over here and turn on, pick a monitor, any monitor. All right, monitor number 10. How's that look? Is that cutting off or is it looking good? Oh, wait, it takes a second. Okay. All right, we good? We got it on my previous screen. All right, so let's go ahead and get going. Go ahead and post questions. I'll probably try to walk through this semi-fast. It is, I know, Saturday. We want to get out there and have some fun with the families, but I want to make sure you get all of your questions answered as well, okay? And I like to change it up and do different topics. So if you're on this webinar and you get a little lost, I have, Morgan's putting that link up there, that /Nadex link. I have a ton of videos, and they're free, okay? And I go from the very basics. What is Nadex, okay? How to use their platform? How do you submit an order? What is a binary? How does a binary work? What is a spread? How does a spread work? And so if you're feeling a little overwhelmed, don't worry about it, okay? One, we're going to record this, and we'll post it. I know Morgan will post it. And also, I try to change it up. If I do the same thing every time, then people get a little bored and they don't come. So I want to make sure you're always learning something new. And so I'm going to combine a few different things, some new stuff and some stuff I just went over, just released this past week. And, there's my standard disclosure, et cetera, so feel free to, watch that, whatever, read it. And use your normal thing. Here's a disclosure on Nadex. Now, here is a really cool thing that you'll notice on this one that you don't notice anywhere else, especially on, like, futures and forex and stuff. It'll say, you may lose more money than what is in your account. You'll never see that on a Nadex disclaimer because you can never get a margin call, okay? All of the trades are 100% defined risk. You know what your risk is up front, and even better, you cannot get stopped out of any single trade no matter how far the market goes against you, okay? And so what I'm going to talk about today is I'm going to go into three things. Trend reversal strategy using Nadex binaries. I'm talking about three different ways to do the strategy. So this is, market falls down, bounces back up. We've been having a lot of, obviously, this huge oscillations in the market lately. And so I'm going to show you a few techniques on determining a trend reversal, and I'm going to talk about three different ways you can use the binaries to do it. And I'll be putting up this week, I have like 5 new videos going up. So they all got to go through compliance, and I make sure that they're, top notch, so that way everything is good there. And so all that's coming up, and then I'm going to go through in the money, out of the money, and at the money binary strategies on trend reversal strategies. And I'm also going to show you a simple technique for determining profit and loss on the price ladder. It can get a little bit confusing when you're looking at the sell side sometimes without opening a Nadex ticket. And so I'm going to show you a simple way to see your P&L maximum profit and loss when you're just looking at the ladder without opening anything. And I got a great question. I need an inexpensive charting for futures and indices. Any ideas? Yes. Hop over to our website at apexinvesting.com/tradingpub, or just fill in tradingpub.com/Nadex, and Morgan will get you all the links. And as soon as you log in, you're going to see a thing that says 12 or getting started steps right here. And I'll actually show you exactly how to get free futures, free forex, and a free platform in order to be able to trade on Nadex. So you'll be able to get started right away. All right, so let's go ahead and get started. What we're going to cover, we're talking about, and I'm not going to go into huge detail on this, and I know me and Morgan have already talked about doing a Fibonacci webinar on Nadex, and so I'm probably going to put together a whole Fibonacci webinar, because Fibonacci's are great, but most people use them wrong, and wrong way to do it, okay? But Fibonacci's, pivot levels are a great, resource. People used to using those. Support levels, resistance levels, we've all, like, if you've been trading for more than a month, you've heard about support and resistance levels. And deviation levels. So also gaps are a way to do, a trade like this. Deviation levels it's a technique that I use. And what I do is I go in and I'll show them to you here. Right here, we post these up live on our site every day. You can get immediate access to them as soon as you sign up as a free member. And what they are is we actually take the settlement price and we take the what's called implied volatility. And implied volatility is implied meaning expected, volatility, movement. Take the implied volatility out of the underlying market's options. We actually take 4 options, take their implied volatility out, and then we take that out over 4 months of contracts, and then we make our own VIX, you could say, for every product. We then factor that in to a deviation formula made for basically short-term traders, 1 day to 5 day traders, okay? And what that gives us is an insanely accurate, basically, levels here. These are not like standard deviations. They're not like, they're really not like anything. So, because everything that you look at, pivot levels, Fibonacci levels, all these things are based on past price movement. This is based on the market's expectation of how far the market will move. It's very objective, and it takes the entire market consistency into account. And I have more webinars on it and stuff like that. You can hop on there and check them out. But I mean, they are to the money accurate, and they are great for picking strikes, for doing reversals, for tightening stops on taking profits. And even if you're not a Nadex trader, let's just say you're a futures or forex trader, they're incredibly accurate and incredibly helpful. And it amazes me. I talk about this on our webinars, like how accurate they are. And I learned this from a floor trader a long time ago, and I decided to, change up the formula a little bit and make it work even better for just very, very short-term trading. And the guy that taught me was a CBOE floor trader, so he traded options on the floor, and so he needed this for shorter-term trading. And it's insanely accurate. So check it out, and I'll show you a couple examples of that here in a minute. Here's here's soybeans. We're actually, I know some of our members will see this and they'll be like, where is that and how do I get it? We are for you, and it'll be on your chart. And so that's soybeans. So you can see that came down, went down and hit a -1 deviation, which is basically the most we expect the market to move in a day. And it bounced right off of it. So a perfect, reversal play. And you can go and you can pull up any of the pairs that you want to. And it'll give you just a variety of different trades to check out. So, see right here, we had basically it bounced up, hit 0.7, fell back down to 1, went back up to 0.7, fell right back down. And I mean, it's always stopping right around that. Anyways, so we're going to talk about trend reversal strategy on binaries, and we're going to compare different strikes for doing it. And just in case you're newer to trading, trend reversal strategy is when you go the opposite direction of the way the market's been going, okay? So if we're looking right here, market's moving down, also when we buy. Market's moving up, we sell. That's a trend reversal, okay? So you're basically fading the market. And again, you can do that on any of the major levels. Also, if you're doing what's called a gap trade, which is the difference between where the pit closed and the pit reopened in the morning, and basically fading that gap. So if the market, closed at 14.10, then it opens up at 14.03, then you're buying, even though it's been trending down all night, you're buying because you're expecting the gap to fill. And there's reasons for that. I talk about that on different webinars. But anyway, so that's a trend reversal strategy, and here's just a screenshot of the deviation levels. So in this right here, what I have is just Fibonacci levels. So looking for, retracements, and so, just take the drawing, and it's pretty simple. On any charting platform out there, you can do Fibonacci levels. You basically just choose the drawing tab, wherever that is on your charting platform. I think on Ninja, you just right-click, go to Drawing Tools, Fibonacci retracements. Let's see here on Thinkorswim. You can go in and, let's see here. It's right here in the bottom. You'll be able to click right here and then just go to Fibonacci retracements, and then you can do a fib, from the low to the most recent high, like that. Okay, and you can see how the market usually will stop and oscillate right at fib levels. It's not that they're magical; it's just that so many people use them, and that's why they work. So we have these fib levels on here. The market went up, and then it didn't call this because we drew it to the high. Okay. But and then it moved back down, and then it hit the support 1 pivot level. We have the pivot level on here as well, and most of the platforms also have those. It also went down and it hit the -1 deviation, and it's almost to a 38% fib level, which is a major level. Okay. And you go in, I have what's called the apex pattern. You can sort of see a little bit of that on here. It'll show like pivot points, like see that P right there saying, hey, this is a pivot. So, and so there's just a lot of different ways to determine pivots. And this is what happened on this trade. If you went, and we actually took this trade on a trend reversal in our P3 service over there this past week. I think it was on Tuesday, and we went long when it pivoted right off of this. Okay. If you want the pit hours, that's a good question. Pit hours, just hop on over to cmegroup.com and go to products, go to CME Globex, go to whichever one you want, like FX, and then you can scroll down here and you can pull them up. So now indices do work better on gap trades, okay? The reason they work better on gap trades is because the stocks themselves were not trading between 3 and 8:30 or 4 9:30, whatever time zone you're in. So since those stocks weren't trading, there's a ton of limit orders that have not been filled in the market. But the futures were trading all night long. And so when it goes down and then all of a sudden the pit opens up, everybody comes in, the cash market opens up, those stocks start turning up, the futures start pushing up, and that's what causes the gap to fill. So there are no pit hours for spot. So it's an electronic market over the counter. It trades all the time. Must see here because you can transact, currency at any given moment of any given day. So, and so what you want to do is you go in and you actually buy when it hits that pivot level. And as you can see, it moves up, up, up. If you go over and we look at, let's say the other, strategy right here, hits a -1 deviation. It also, of course, hit the support too. It almost touches the fib level, and like I said, the deviations are just incredibly accurate. And I entered the trade right here around 1386, 1387. And you go in and it starts going up and it hits the -7, it hits the -5, it hits yesterday's close, it actually fills a gap. And then it goes on up even further, hits -5, and it hits +7 deviation. So, I mean, it's just going right through and it basically stops right over here right at the +7 deviation, support 1. It also hits the pivot level, it hits, resistance 1. Didn't quite hit resistance 2, but it's going up and here, 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 here. But also, every time it hits a deviation level, you could be tightening your stop. So there's a lot of different ways to do that. And yeah, I also, of course, I always look at price action. So on price action, I'm usually going to buy right here at 1384. I'm usually going to wait for it to break the previous bar's high. And then I'll make sure that either we have a really big volume bar, because that means they're unloading their volume, or they're unloading their shares, or that we're just seeing, a really low volume. So if it's average volume, that's going to make me a little bit more nervous. But if it's really low volume, that means that there's really no commitment to the downside. If there's really high volume, that means they're getting rid of their shares and it's about the reverse. So it's the average volume that you got to be worried about because there's really no clear signal one way or the other. All right, so let's go ahead and go through just some really quick binary basics, okay? And by the way, these are binaries on Nadex. They are not binaries on bucket shops. All right, binaries on bucket shops are horrible, and I can go into so many different reasons, okay? They go in and they're going to pay out like 60 or 70, maybe 80%, but you lose 100%. They give you these bonuses that lock your money in basically for life so you never get it out. You're wiring money overseas to some weird country you've never even heard of before and you couldn't point it out on a map. So there are so many, I literally have a whole video on at least 10 reasons to stay away from them. And, it's just, there's Nadex, you can get a 1900% payout on a Nadex binary. You can only get like a 70 to 90% payout on these other binaries. So anyways, yeah, definitely say no to Cyprus. And let's see here, got another couple comments. Volume precedes price. Sometimes. So, but volume is definitely the #1 predictor. Volume and price go together. So it depends on exactly what kind of strategy you're looking at. So, but yeah, volume usually does tell you a story about what's about to happen with price. So in that way, you can say yes, volume precedes price. Deviation lines, fib lines. Deviation lines have nothing to do with retracement. They're not a mathematical calculation of yesterday's numbers. They're actually implied volatility-based numbers on the market's expectation of how far the market's going to move. They're completely different. And then let's see. There we go. Good question. Before we get into the binary basics here, Nadex is an exchange. It is regulated by the CFTC. Everything they do has to go through the CFTC. Your money is held in segregated accounts, and they do not take the other side of the trade. They are not a market maker. They do have no conflict of interest with your trade. There is a market maker, but since they're an exchange, you're anonymous, so they can't see if you're getting in, getting out. They can't see if you're winning or losing. They just see an order, they fill it. And Nadex is there to simply facilitate the transaction, and that is it. They don't make money on bid-ask spread. So the market maker job is to do that, but since they're a market maker with an exchange, they actually have to define what that bid-ask spread will be. And the market maker is whoever wants to be a market maker. If you got the bucks and you want to be a market maker, hop on in. But it's not the same as, futures and stuff like that. But I mean, if you have, about $1 million or so, you can be a market maker. But you got to put up 100% of the other side of the trade as a market maker on Nadex. They actually make both sides be fully collateralized. So they can't go in and just manipulate it with nothing. And also one of the big things is Nadex is a derivative exchange. Okay? And a derivative exchange is based on something else. Okay? So again, derivative exchange based on a derivative. So let's say a mortgage is a derivative of a house. Mortgage insurance is a derivative of a mortgage. So a binary or a box spread over a Nadex, those are derivatives of their counterlying market. So like they're a derivative of the S&P 500 futures. By the way, not the SPX, not the spiders. Okay, the futures. And then the forex is the derivative of the spot market forex. So just understand that. Why is that important for you to understand? Because that is what moves the market. It is not the demand for the binary or the demand for, so like supply, demand, moving price up and down. That is not what moves price up and down. What moves price up and down is the underlying market, and that's it. So when the underlying market's moving up, it moves up. When the underlying market's moving down, it moves down. And the market maker, the nice thing about that is since they do have contractually obligated market makers, they have to be they have to actually go in and make a market. So they have to provide liquidity. And which makes it very, very, very good. Does Nadex not know who the real winning traders are? Nadex can go in and they can see P&L, but it doesn't matter because they don't care if you're winning or losing. They make money on exchange fees, so they're basically just not on the other side. So Nadex doesn't care. They more care who are the volume traders, right? Because they want you to trade volume. They don't want you to get hooked. They don't want to turn you off. They only make money when you make a trade, not when you win or lose. When you make one, and so they're making a 90-cent fee per side, and it caps at $9, which is pretty cool because you could do 100 binaries, and it's still only $9. But they make exchange fees. And then let's see, I always get emails from bucket shops too. By the way, if I sent you a link for a bucket shop, like say Bank of America or one of these guys, they would actually give me 20% of whatever money you deposited in about 3 seconds. So how does that make you feel about getting your money back from bucket shops? But yeah, you definitely want to do that. So yeah, they're just trade-based fees, just like CME. So CME, you're paying about $1.23 a side whenever you do a S&P E-mini. And let's see here, other questions we got. Nadex, you're going to trade directly through Nadex. And if you go to tradingpub.com/Nadex, Morgan will send you the direct link for that. But you'll hop on there, you can get a demo account, you can get a live account. It's only $100 to fund a live account, okay? Now, obviously, don't just go in with $100, but you can. Right? The reason I say that is because people hop in and they place 2 trades and they lose and they're like, oh, I'm done. Come on. And I also can tell you a way to get your demo account extended for a year. Just hop on over to our website and I can give you that information as well. They just don't want me to post it in webinars. But if you want to get your demo account extended for a year after you fund a live account with at least $100, I can let you know how to do that. But there's a certain way to do it, and it's not by calling customer service. Let's see. Yeah, there's a lot of different things they can do. They're always, if you have any ideas on the Nadex platform, by the way, they're really, really good at responding. They've added a ton on there. You can't trade Nadex if you're a U.S. resident yet, but one thing you can do is you can hop over to, I want to say it's IG Index, and you can trade the date. Now, they have a lot of different things. Okay, you have to be a non-U.S. resident to trade IG, but so definitely hop over there, IG Index. And they own Nadex. They're publicly traded. They're up like 380 million this year. Okay, they're publicly traded on the FTSE 250 over in the London Stock Exchange. Definitely an awesome place to trade. And again, they own Nadex, so there's a bunch of money behind them. It's not just this fly-by-night new company you've never heard of. Okay, and they've been around for a long time. And you want to trade the daily price ladder binaries. All right, they have all these other weird binaries. Stay away from them. Okay, daily price ladder binaries when you log into your IG account. All right, let's see here. Bucket shop. A bucket shop is defined as somebody who, one, trades against you, okay, directly. So they know if you're winning or losing. Therefore, they have an incentive to move the price. They only have a call and put. They don't have the ability to actually have price ladder binaries, which we'll see those here in a second. And let's see here. What else? They pay out large commissions, so on initial deposits. They're offshore. There's no way to deposit the money in a United States account. Now they'll say we have, like, one of the big binary bucket shops will say we have an office in New York. No, they don't. Go down to New York. Tell them you're going to show up at their office tomorrow. They will freak out. Okay, well, you have to be a big client with 100 grand to show up to our office. Really? So I've actually been to their building. There's nothing there. They don't have, they're not listed. They may have some sort of, whatever, postal address or something, but that's it. Yeah, Nadex is in Chicago. The volume is enough. That's what I can tell you. So the market maker has to make the volume. So again, volume doesn't matter in this case because it's a derivative of an underlying market. The underlying market moves the price, and since the market maker has to make a market, here's a market to where you get filled. And on Nadex, you can trade. Good question. These are all good questions. You can trade on, let's see, the DAX, the Nikkei, the FTSE 100. You can trade the Dow, S&P, NASDAQ, and the Russell. You can trade gold, silver, copper, oil, natural gas, corn, soybeans, euro dollar, pound dollar, Aussie dollar, euro yen, pound yen, US yen, Aussie dollar, US franc, and US Canadian. So you can trade quite a bit. Let's see here. Let's already went on the trade fees. Yeah, 90 cents a side. Yeah, there we go. We got that. We got that. And the deviation levels, basically it's a standard deviation formula, but instead of using standard deviations, we use implied volatility. Okay, I'm going to move forward. Binary is a true or false statement. It has 100% defined risk, and you can't be stopped out. Okay? Buying a binary means that you're saying the statement is, say, true. When you buy, you're saying it's true. Okay? And I'm going to show all this. You'll see it. So when you buy, you say the binary is true. US 500 December contract is greater than a certain strike at a certain time. When you sell a binary, you're saying that the statement is false. The US 500 December contract is less than or equal to a strike at a certain time. And then you can go in, and so basically you're saying true or false. All right, so true, buy, greater than. Sell means less than or equal to that strike. Now you don't have to hold it to expiration. You can get it out, in and out before, and I'll show you some charts on that. And again, you can close it before expiration. Now, all binaries on Nadex are always worth $100. So if the risk is $10, then the maximum profit potential is $90. If the risk is $50, then the profit potential is $50. If the risk is $90, the profit potential is $10. Does that make sense? So it's always worth $100. So just go back and forth on that, but it's always worth $100. Okay? And whatever your risk is, your difference is your profit potential. Okay, whatever your profit potential is, your risk is the difference. So we're going to trade a reversal on a Nadex binary, and I'm about to show you a price ladder here. When we trade a reversal on a Nadex binary, there's several ways to trade the binary. One way has a really high profit potential, but the market has to move more. Okay, so you have a great risk reward. Okay, the second way has about a 1-to-1 risk reward, but the market can stay flat, or if you're buying, could just move up or stay flat, and you make money. Third way has less than a 1-to-1 risk-reward ratio. It actually has the worst risk-reward ratio, but the market can move down a limited amount, move up, or stay flat. So basically, it's a neutral or premium collection strategy. And so we go over here. We can check this out. And what we're going to do, this is a price ladder, okay? And it's pretty simple. If you've ever traded options, you're used to this. But if you traded binaries, you're probably not if you traded a bucket shop because they have a call and a put, buy, and sell, all right? So you can go in here. And you can say, I want to buy this one, or on down the list. All right. And what you're saying is simply, if you buy, you say that I believe the US 500 will be greater than 1428 at 415, or I believe the US 500 will be greater than 1389 at 415. Or if you're selling it, you're saying I believe the US 500 will be less than or equal to, because you're saying false, 1383 at 415. Now, if the market moves up and you're buying it, it's going to go up in value. If it moves down, it's going to go down in value. So if you're shorting it, you want it to go down. If you're buying it, you want it to go up. But at expiration, it'll either worth 0 or $100, depending upon if that statement is true or false. Okay. And like I said, I know some of this is really new, so don't feel frustrated if you're like, I don't get it. Okay, that's okay. We have a lot of different pieces in here that we go through, and I'm just trying to bring some new content. Okay. So out of the money on a buy, and this is important. On a buy, the underlying is lower or equal to the strike. Because remember, when you're greater than, Okay, so that means it's in the money. It's greater than that strike. So if it's less than the strike or if it's equal to the strike, it's out of the money. When you're selling a binary, if it's in the money, you're saying it's less than or equal to. So if it's out of the money, all right, you're saying it's higher than the strike. Remember I said an out of the money can have to move further. And you can close it out early, like for a 1-to-1 risk-reward ratio, and you can hold for an even better risk-reward ratio, okay? And positive. So of out-of-the-money binaries, you get more potential. Negative, market has to move more. So let's look at an out-of-the-money binary. Okay, here's a chart on it. Now, understand when you're trading binaries, you're not necessarily trading the charts, okay? You need to be looking at the underlying market, okay? And then, let's see, I've heard it's not for non-USA based. Non-USA based, go to igindex.co.uk, okay? So again, if you're not in the US, you do the exact same thing. Do the binary price letters at igindex.co.uk. All right. Again, they own Nadex. Their binary, all the other binaries are weird, but less coffee. Gotta have some coffee, man. 9 a.m. on a Saturday morning. All right. So you go in here and you buy this binary, $20, okay? That's all it costs you. So if you buy it and the cost is $20, that is your risk. And $100 right here is the maximum value. Remember, they're always worth 100. So what's your profit potential? Your profit potential is $80. Well, let me put this in stock terms for you. That's like buying a stock at 20 and selling it at 80. Because you could do 1 share, 1,000 shares, 5,000 shares. And so, you know, people go in, it amazes me. You can buy it at 20, you can sell it at 40. That's like buying a stock at 20 and selling it at 40. You know how many Facebook people would like to do that one right now? Okay? And you can buy it at 20 and sell it at 60. So you don't have to hold the thing to expiration. In fact, don't hold the thing to expiration. I almost never hold an out-of-the-money binary. Again, an out-of-the-money, meaning one that basically has a risk of less than 50, until, you know, I never hold it till expiration. If I do, I usually lose. That's why I don't do it. Because, you know, one tick could mean a win or a loss. It has to move really far. Now, this trade, if you would have bought this one, I think I bought this exact one. Anyways, if you would have bought this binary, then, yeah, it would have made $80 if you held it to expiration if you wanted it at $20. Okay? But you know what? It's okay to buy at 20 and sell at 40. That's a good trade. You just doubled your money. You know, you went from 20 to $40. You go up there, you make, you know, 200% return if you sold it at 60. You make a 300% return if you sold it up here at 80. So you're making a 400% return if you, you know, end up getting out at full profit. And let's see here. Does IG Index trade Nadex? IG Index is its own, so, but it's very similar. That's what I'm saying. The binary price ladders, just go there. You'll see. Okay, it's the same thing. The binary price ladders are the same thing. But they don't trade Nadex. Nadex is an exchange. IG Index is its own binary place, but it's totally different than the other places out there. Like I said, they own Nadex and they're publicly traded, so they're regulated. All right, so that's an out-of-the-money binary. So again, if you're trading the strategy on the reversal, just a review for you, okay, market, let's say down here at 13, you know, 84, 83, whatever, and you bought the binary for 20 or $30, and the market started moving back up, then you could have bought this binary, you could have sold out of it at any, you know, time along the way or held to expiration. If you did, in this case, you would have made 80, but don't bank on that. Bank on making, you know, 1 or 2 times the amount of money you put in. And that's the big advantage of the out-of-the-money binary. By the way, you can never make a 1-to-1 on a bucket shop. All right? You can make like 0.8 to 1, like you can make $80 for $100 of risk, but you're never going to make, you know, you're never going to put up $20 and make $20. You put up 20, maybe make 16 or something like that. So Nadex, you actually can make these massive returns. So that's one of the reasons I love Nadex. All right, so now let's talk about in the money with the trend reversal strategy. On the in the money, and we're going to go to at the money. We're going to talk about 2 different ways to do it. So at the money is basically where the market's currently trading. And the nice thing is, if you do this, the market could go up or it could stay flat. Or if you're, you know, selling the trend, it could go down or stay flat, and you could still profit. So remember, on the out of the money, it had to move up. This one doesn't have to move up; it can stay flat. And you have approximately a 1-to-1 risk-reward ratio. So now you're not going to get like, you know, $40, $60, $80 profit on, you know, $20 risk, but you could go and get a profit of $50 on a $50 risk. Now, on an at the money, in the money binary, if I'm risking 50, since my risk reward is 1-to-1, okay, then that means I can basically make $1 for every dollar risk. And so I'm usually going to be holding these to expiration. And I wish I would have done this Friday, but there's a couple different ways to do it. But I got out of break even on one of my trades on Friday. I was hoping it would go down even further. And so $50 risk. All right, if I hold it to expiration, remember what's it going to be worth at expiration if it's in the money? It's going to be worth $100. Okay, so $100 right there. And yeah, Morgan, if you'll go ahead and post that link again so they can get access to the link. But $100 is what it'll be worth at expiration. So if I risk 50, then the profit potential is 50. Yeah, so just go ahead and click on that link right there, Hans, and Morgan will get you all the information about how to get free access to our website with all the free videos. And so I'm risking 50 to make 50. Now remember the market, sitting over here at 13, we'll say it's 1382, 1383, whatever. And so we'll say if the market's at 1382, whatever. Then if the market stays at 1383, or if it goes up, we'll make 50 bucks. All right, so flat or moves, we make $50. So it's a pretty cool strategy. 5 and I'm risking 50. Well, I have to be right a lot, right? Because I have to be right twice, or I have to win 2 times for every 1 time I lose. So you got to hold it to expiration, but the market again can stay flat or move, where the other money it had to move. Now, premium collection, okay? In the money, though, this is an awesome strategy, and there's a lot of people that really love to do it, and the deviation levels are very helpful on this. So, such as if you're going in and you're doing deviation levels, looking for like a 0.7 deviation where to sell, the binary, things like that. And these are in the money. And again, in the money, on a buy is, the underlying is higher than the strike. On a sell, underlying is lower than this strategy right here, okay? Deep in the money, all right, means that it basically is very deep in the money. And I'll show you an example of deep in the money here in a second. Here's the positive. It can go up. It can stay flat. It can even go down quite a bit, and the trade could still profit. Or on the short side, it could go, down. It could go up a certain amount, and it could stay flat and still profit. The negative is there's a higher risk, and there's a way to manage that risk. So let's look at this. All right, we got the S&P trading around 1384, 1383, whatever. Okay. Well, what is the strike? The US 500 will be greater than 1377 at 415. Well, if it's going to be greater than 1377 at 415, well, that means that's down here, 1377, right? That's where the strike price is. This is where the market, is currently trading at. And so if it goes up, then I make money. If it stays flat, I make money. If it goes down but expires greater than 1377, so 1377.1 or higher, I make money. All right, so I have 3 different ways I can make money. Now, downside, my risk right here, 80 bucks. Okay, my profit potential, only $20. So why would somebody want to take on an $8 risk for a $20 profit? Because the market can move up, stay flat, or move down quite a bit, and you'd still be profitable on the trade. So that's why you'd be interested in that. Now, maybe you don't want to take on an $80 risk. So what you could do is you could go in and say when it gets to at the money. So let's say the market was falling. If it fell down to 1377, the binary will always be worth approximately $50 if it's trading at the same price as the strike. So if the market's at 1377, the strike will be at 13, or basically the price of the binary will be at $50 if the market's at 1377, the strike's at 1377, which means I could go in and sell it for 80. Okay, and then I could buy it back for $50, and I'd only have a $30 loss, and instead of a $80 loss. Well, a $30 loss is a lot easier to recoup, when you're making 20 bucks. So that's one of the things. Yeah, Arian's awesome, and I appreciate his help. You go in here, and then also you could do it on the other side. So you could actually do sort of I could say an iron condor, but there's only one leg, so don't get confused on that. So if you are an option trader, so you could actually sell it deep in the money up here. You could sell another deep in the money down here. And basically you're saying that you believe the market will stay within a range. And so then you could actually bring in $40 and only lose $30 if the market goes against you. So it's pretty cool. But anyway, so check that out. That's, I know this is sort of fast. I did a whole webinar on this that was 2 hours long this past week. And that's on our website where I go into a lot more details and questions. And we go into a summary and then a couple more points, and then I'll have to wrap it up. Use Fibonacci levels, pivot levels, support resistance levels, or diagnostic deviation levels to determine potential reversal prices. And then go in and choose, do I want to do premium collection or a medium to long meaning the large trend reversal strategy, and what's my target for the market. If I'm using premium collection, I'm going to use a deep in the money binary. If medium, I could go in, I could do a large trend reversal compared to an out of the money to at the money or in the money. So I basically got to look at it and go, okay, do I want an out of the money or do I want an at the money, in the money binary? And then if I'm using out of the money, I got to set a take profit order the second I get in, okay? And I can't stress that enough. Number one mistake of traders on binaries, if you're doing an out of the money binary, meaning your risk is less than 50 bucks, put your take profit order in immediately, okay? So if you don't know where you want to take profit, you should not be placing the trade. That's all I got to say. Don't place the trade if you don't know what price you want to get out at. And right here we got a premium collection deep in the money binaries. And let's see here. And that's deep in the money moves up, stays flat, down a limited amount, and you profit. More risk than reward. Out of the money binaries, they have a great risk reward, but the market has to move more. Okay. But you could double your money in 1 to 2 strikes. So that's pretty cool. And but the negative time can negatively impact you. So if it takes a long time for it to get there, you may actually lose on the trade with an out of the money binary. I talk more about this on our videos. And then in the money, at the money binaries, profits capped at 50 bucks if held to expiration, but the market move up or stay flat and still profit if you're buying, or the market move down or stay flat if you're selling. And then this is right here. I'll leave this up for just a second. You may want to take a screenshot of this. Okay. So I'll give you about 5 seconds here to take a screenshot of this page, and this is a summary of out of the money versus in the money binaries. And this is also going up on our website this week, but I put that right there for you. All right, time's up. Simple technique. Okay, here's a cool technique. When you're looking at a binary price ladder, there's an easy way to determine max loss and max profit without opening. If you're selling, the bid side of the price ladder is your max profit, and I'll bring up a binary price ladder. So the max loss is $100 minus the bid price. If you're buying, the offer side is the max loss, and the max profit is the offer minus $100. So let me show you what I mean real quick. You can go in here, and if I'm going to buy a binary, okay, this is the price, the offer. So the offer side shows my risk. So my profit potential is $100 minus 2, 98 bucks. All right, well right here, right around my risk is 55 bucks, and binaries are always worth 100, right? So basically a $45 profit potential. That's on the buy side. So buy side shows me my risk. Sell side, okay, and this is really helpful because sell side gets really confusing if you don't understand this. And it took me a while to even figure it out. Sell side shows you your profit potential. Buy side shows you your risk. Sell side shows your profit potential. So my profit potential is, say, $51 right here, okay? Then my obviously $100 value on the binary, so I can make 49, or I can lose 49 bucks on the trade. So sell side shows me profit potential, and that minus 100 bucks is my risk. Buy side shows me my risk, and I can use that and simply $100 minus that, and know my profit potential. Now you also can just literally click on it and put in a quantity of 1. It'll show you your max profit, max loss. It'll do it for you. The math is all done for you on the platform. But this is sort of a cool trick for those that have been trading for a while. They're trying to figure out, I don't understand what the sell side means to bid. And basically, that's your profit potential. This is your risk. All right, let's see here. That's what I got. That's pretty much right on time. To open a live account, actually go to TradingPub. Go to tradingpub.com/Nadex. All right, so please go to tradingpub.com/Nadex so that they can know that we're pushing people there through TradingPub. And it's just a good to come on and do some webinars with you as well. I'm an educational partner with the Nadex Exchange, and so I do webinars for them. Actually hosted their booth in Vegas last month, and they called me up and they asked me to host it. So, I help out a lot on Nadex. Basically because I love trading Nadex, and we got together and I'm like, hey, y'all need some good education on this because there isn't any. And came together, and it's been awesome. Let's see here. Various time expirations. Yeah, they have weekly. Looks like Ariana got that one. And let's see here. Yeah, I owe Aaron some money, I guess. What factors do you use to guide your entry-exit decisions? I'll use deviation levels. I'll use fib levels. My number one thing is I use what I call the apex pattern. So like this P, and then there's like an E right there, and that's where I buy. So, and on the example I showed earlier, I also bought right there on the E, the entry bar. So when it hits a deviation level and it's hitting an E, that's like a perfect entry for me. Let's see here. It's like selling a put spread, sort of, except for you don't. I mean, it's made for day trading. Okay, and but yeah, you'd have that basically your cap risk, cap profit. So in that sense, it's like that. But also, it's always worth $100. So there's a similarity to it. Also, time affects it differently because it's basically last day of trading. So if you think of Friday options every Friday, every day, or every 2 hours. You could buy lower strike as a hedge. There's a better way to do hedges. Spreads is the better way to do that. And I talked about how to do Nadex spreads for hedges. I love to hedge with the Nadex spread. We're not going to go to that this webinar. There's not enough time. But and it's a great way to hedge like futures and forward contracts. Yes, you can definitely set a take profit order. You should set a take profit order. And thank you, Stephen. Let's see here. My book on binaries is in process. So I put a book on binaries and spreads. Wiley is having me put one together for him, so I'm pretty excited about that. So as soon as I get it done, they'll get it out. What did I say about Friday? Oh, I'm saying, but if you're an options trader, you know like how cool it is to trade options on Fridays, expiration Friday. Well, these are like the advantages of that carry into Nadex like every day. So basically your delta goes to 1, and it's a lot of stuff that if you're not an options trader, you're like, what are you talking about? But it's awesome. Let's see here. Yep, everything on the website. I think I got everybody's questions. Let's see here. Bucket. Okay. Oh, one of the questions. Scanner. Yeah, hop on over there. There's several different prices for the scanner, but you can access it for free right now. So hop on, check it out, and then we have like 3 different plans if you want to keep using it. But you get like 2 weeks. You can ask for 2 more weeks for free. And the scanner's for the spread, so it's not for the binaries. And that answer was for Sabot. Minimum deposit to open an account with Nadex, $100. Yes, I do have a live trading class. It's usually on Thursdays. I'm going to have one on Monday. If you hop over to tradingpub.com/Nadex, and I'll be on there on Monday with Morgan. I think that's every question. Did I get them all? Will the book reach lower? Go to our website. I promise you the videos are they're like 15 minutes. They're very focused. They take their time. You can do rewind, play. So this is to get you excited, right, and to give you some new ideas. And but I think everyone would agree. I do have a bunch of videos on there. They're like 15 minutes long, and they take you step by step, and I go a lot slower. All right, let me hand it on back over to Morgan, and I will. I'll definitely be happy to answer any questions you have. Hop onto our website through the link that Morgan's gives you. And as soon as you go there, you're going to end up on our site. Please do go to that link because that lets us know where you came from, okay? And I really do appreciate Morgan for inviting me to come on and share with you some of the stuff I know about Nadex. Once you get there, as soon as you get there, just go ahead and click on the Get Free Access link, and that'll take you into the sign-up form. I can't sign up because I'm already a member. But and then fill it in, sign up right there, and then you'll be able to get access to the site, okay? And no credit card, and it takes about 5 seconds, and you'll have access to everything. And there's a forum, and there's tools, the deviation level, the scanner. You can try out the Apex strategy that I use, all that stuff for free.
Great. Thank you, Darrell. That was an excellent job as usual, and we always appreciate you being a part of our events and the great education you give with Nadex. And that's it's interesting. Darrell spoke to our group. I guess it was a couple months